Breaker blocks are easier to find than you think. In this video, I will share with you a very efficient price models for identification of breaker blocks. You will learn the meaning of breaker blocks. I will explain how to draw and use them in trading Smart Money Concepts SMC. Like this video, subscribe to my YouTube channel and learn the essential ICT basics for beginners. Let's start with an important theory. That is a classic bullish trend model. In that you can see that the price consistently updates higher highs and higher lows. After formation of each new higher high, the price retraces and sets a new higher low. That is how we confirm a bullish trend with structure mapping and SMC. In this price model, our bullish order block will be the area based on the last higher low. It will be the zone from where our last bullish wave initiated, the wave that successfully violated the previous high with the break of structure. We will assume that within this order block zone, smart money were accumulating huge buying volumes. For that reason, such a strong bullish movement initiated from that. Last days of my big end of summer sale. Until tomorrow, get my VIP Signals Trading Academy books and courses with a huge discount. For more info, check the link in the description below. Don't miss your chance, traders. According to this price model, our trend will remain bullish till the price respects and trades higher than our bullish order block, till the price is above the level of the last higher low. We will also assume that after a test of that zone, another strong bullish wave will initiate. However, there is no guarantee that our order block zone will be respected. And in some specific situations, the market will violate that and go through that. A bearish violation of our order block zone will be an important event that will signify a violation of a current bullish trend. The price will set a new low and we will call that a market structure shift. Our bullish order block will turn into a breaker block after a breakout. It will be an important area from where we will look for selling. It will be the zone from where the next strong bearish wave will most likely follow. It will turn into a zone where smart money will start accumulating their selling orders. The best way to predict a market structure shift and the creation of a breaker block is to identify significant liquidity zones. In a bullish trend, market structure shift usually occurs after a test of a significant supply zone. Usually after its test, we see a confirmed liquidity grab, a false violation of that structure. A consequent strong bearish movement and violation of our order block zone will provide a very strong bearish confirmation. Let's study some examples. Examining a price action on a pound Aussie pair. What I did here, I executed a structure mapping. You can see that here in a daily time frame, the pair was bullish. The market was trading in a strong bullish trend. Then watch what happened after the price tested a significant supply zone. You can see that the price went above that and we got a confirmed liquidity grab. Then the market started to fall and you can see that the market violated our order block zone. By the way, here's how to draw order block zone on a candlestick price chart. Your bullish order block zone will be based on the level of the last higher low and its upper boundary will be the low of the body of that candle. So our bullish order block zone was right here and you can see that with a strong bearish candle the market violated that. Our breaker block became right here after a breakout of our bullish order block zone. It turned into a breaker block and here was the zone from where we should have sold the market. You can see that the price dropped strongly then and you can see that we got a confirmed bearish reversal. One more thing to note about that setup is that when we see a test of a breaker block, almost never it will be perfectly respected. Smart money will manipulate the market and we will see liquidity grabs beyond that. They will do that to stop you out from the trade. So make sure that you set a safe stop loss when you trade from a breaker block. Another another example. We got a strong bullish trend on a dollar CAD pair, and we can easily spot that with structure mapping. Then look what happened when the pair reached a significant liquidity zone. Right here we got our significant supply zone that the price reached. We got a liquidity grab and the price went beyond that. And then a strong bearish wave followed. And you can see that our order block zone was violated. And here how we draw that. The lower boundary of our bullish order block zone is the level of the last higher low, and its upper boundary is the low of the body of that candle. So here's our bullish order block zone that was broken. After its breakout, it turned into our breaker block. That was the zone from where smart money were selling. That was the zone where they were accumulating their selling orders. And again, after its test, you can see that we got a liquidity grab beyond that. So always place your stop loss way above that zone to not be stop hunted. And you can see that then a strong bearish wave followed. Now let's study a bearish trend model. That is a classic bearish trend model in SMC. In that you can see that the price consistently updates lower lows and lower highs. After the price updates each new lower low and pulls back, it forms a lower high then. In this price model, our bearish order block will be based on the last lower high. It will be the area where smart money were accumulating their selling orders. It will be the area from where this strong bearish movement followed, the movement that managed to break a current structure and update the low. We will assume that the market will remain bearish till the price is trading below the level of the last lower high. And in future, when we see a test of our order block zone with a high probability, a strong bearish wave will follow from that. However, that's not always the case, and there will be the instances when the price will break a bearish order block zone. A bullish breakout of that and violation of our level of the last lower high and of our bearish order block zone will be a very important event. With the formation of a new high, we will call that a market structure shift. It will confirm a violation of a current bearish trend. After a breakout of our bearish order block zone will turn into a breaker block. It will be a very significant zone from where we can look for buying. That will be the zone where smart money will start accumulating their buying orders and from where a strong bullish movement will most likely start. And again, the best way to predict a market structure shift in a bearish trend is to identify liquidity zones, the demand zones. In a bearish trend, market structure shifts usually occur after a test of a significant demand zone. What we should look for is a test of that demand zone and the liquidity grab below that. A consequent strong bullish movement and the breakout of our bearish order block will provide a very strong bullish confirmation. And of course, our breaker block will be the best zone for us to trade from. Let me show you some real examples. Let's study a price action on a Euro Swiss pair. You can see that the market was strongly bearish, and with structure mapping we can easily identify a bearish trend. Then the price tested a significant demand zone. We got a confirmed liquidity grab and the price went beyond that, and then a strong bullish wave followed. With that, the price violated our bearish order block, and when we draw a bearish order block, its upper boundary is based on the level of the last lower high, and its lower boundary is based on the high of a body of this candle. And you can see that our bearish order block was broken. After a breakout, it turned into a breaker block. That is now a very important zone, the structure where smart money are accumulating their buying orders. That will be the area from where we can buy, and that will be the area from where with the high probability a strong bullish wave will follow. Look at this strong bearish trend on a WTI crude oil in a daily time frame. The market was falling rapidly, and then we reached our significant demand zone. We got a liquidity grab beyond that, and then the market started to recover. The price went up and our bearish order block zone was broken. And you can see that when I draw that, its upper boundary is based on the level of the last lower high, and its lower boundary is based on the high of its body. You can see that our bearish order block was successfully violated, and after a breakout, it turned into a breaker block. That is our breaker block, and that is a very significant structure now. That is the area from where with the high probability a bullish wave will follow. And what is so important about the test of that zone is that you can see that we got a very deep liquidity grab below that. That is what very often happens when the price tests a breaker block. So planning your trade, make sure that you have a safe stop loss. With the high probability growth will continue now, and crude oil will go to higher structure levels. A proper combination of structure mapping and liquidity analysis will help you to identify a market structure shift and the creation of a breaker block before they happen. And the models that I shared will help you to confirm bearish and bullish breaker blocks. Let me know, traders, in the comment section, what else do you want to learn in SMC? Also, traders, don't miss my end of summer sale. For more info, check the link in the description below. Also, traders, please watch my other videos. I have a lot of videos about SMC in this playlist.